Welcome to Yahoo Finance's flagship show, Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First off, U.S. stock futures starting the week off in the red again. And this push following a turbulent week for stocks that we saw last week, particularly for tech. But it wasn't just stocks that saw volatility. Bitcoin also sliding after wiping out all of this year's gains. Bitcoin's total market value has now plunged by about $600 billion from its October high. Plus, investors are awaiting a big potential catalyst this week, earnings from Nvidia. The chip giant will report this Wednesday, with analysts on average expecting $54.8 billion in sales for the quarter. That would be a 56% increase on a year-over-year basis. In October, Nvidia CEO Jensen Huang said his company had $500 billion in orders in 25 and 26 combined. Nvidia has seen its quarterly revenue grow nearly 600% over the past 4 years. Meanwhile, 13F filings revealed that investor Peter Thiel sold off his Nvidia holdings last quarter. The fund offloaded its entire stake, which would have been worth about $100 million. And we will finally get the long-awaited September jobs report this Thursday at 8:30 a.m. Eastern Time. The payrolls data was put on pause during the government shutdown. The average estimate among economists is for 50,000 jobs to have been added in the month. Investors will also get Federal Reserve minutes this week, which will offer more insight into the central bank's thinking ahead of the December FOMC meeting. Let's get a check-in on stock futures. Now, we should mention earlier indications were for a higher open here this morning, but right now we are seeing futures slip back into the red. First, it was the Dow futures kind of slipping in that direction, and then the other major averages followed suit. This, of course, follows on heavy selling, a volatile week last week that we saw particularly for large cap technology. So let's dig into our top stories of the day. Stocks are indeed lower after a volatile week on Wall Street. Bitcoin erasing this year's gain after falling below 94,000. Plus, Nvidia is set to report third quarter earnings. So joining me now on all of this, senior reporter Ali Canal live at the NASDAQ, senior markets reporter Ines Ferre, and tech editor Dan Halley. Ali, it's so interesting this morning to see that sort of attempt at a rally, and a lot of the commentary out there. I can count on one hand the people that we've talked to who actually say this is a bubble in AI, and most folks out there still seem to be bullish.
Yeah, there's a lot of bullish optimism on Wall Street, and a main reason for that is that the fundamentals are holding up, aka earnings are stronger than expected and have been really strong throughout the course of 2025, but that makes the expectations that much higher heading into 2026. So if you dig through a lot of this Wall Street commentary, the message is that this isn't a meltdown. It's more digestion after a period where we've had record high valuations. The AI demand story still remains intact. However, you are seeing certain signs of fatigue. You have retail flows that have cooled. Valuations still remain stretched, decade highs there. And portfolio managers are hesitant to take on more risk heading into the back half of the year and really the end of 2025. And because you have profits that are still concentrated in these AI infrastructure names, any wobble there is going to drag the overall index lower. So overall, it's clear that this is a market that has been running hot, but these next few weeks, you're going to have this tug of war as the incoming data starts to come in that really either supports that the economy is strong or challenges it at a time when the Fed is really debating that next interest rate decision at the end of December. But you mentioned some of those bullish calls on Wall Street, and we have a new one this morning. Morgan Stanley strategist Mike Wilson is looking for a 16% rally in the S&P 500 over the next year. And he cites strong corporate earnings as a reason for that. He sees the index around 7,800 by the end of 2026, with S&P earnings expected to jump 17% in 2025 and grow another 12% in 2026. So it's all about earnings right now, Julie, and that seems to support this overall market optimism.
That's been the refrain, right, from the bulls who are out there already. Okay, so we're getting to the end of earnings season is one problem with that I get, with one big exception. But what's the next catalyst, or what are these strategists looking for that is going to help turn things around here?
Well, the one big exception, as you just said, is Nvidia earnings, and that's going to be a big sentiment check. Now, most analysts have said it's more risk than reward at this point, considering the valuation story, so that's a big one. But we also have results from Target, Walmart, and that's going to give us a better sense of the state of the U.S. consumer, especially at a time when we've been talking about this K-shaped economy, how those higher income earners are really propping up the broader economy, while those lower income earners, they are really struggling under the weight of inflation and a shaky job market. That's something that economist Mohamed El-Arian talked about at our Invest conference last week, and he said he's worried about a recession in that lower cohort because that could trickle up the totem pole, and then you could have this ripple effect throughout the entire economy. So that's going to be important to know. And then we also have the government data resuming now that the shutdown is over. You mentioned the non-farm payrolls that we are going to get later this week. We'll also have inflation coming in. And these are all data points that the Fed is going to have to look at to confirm whether they can move ahead with that December rate cut. So a lot still to look forward to as we head into the end of 2025.
Yeah, one asset that perhaps is badly in need of a catalyst, Ines, is Bitcoin, because we're seeing it continue to fall here. And we know that Bitcoin is cyclical, but like, what's going on here? Is it just correlated to what we're seeing in terms of the risk-off environment out there?
I mean, there is some of that when you hear what analysts have been saying, but there is the debate going on right now of whether or not this is part of the 4-year cycle that is historically correlated with Bitcoin. And this has to do with the halving event last year, and 400 to 600 days later, you would see the peak. So whether or not that is happening. And look, that 4-year cycle, by the way, since the beginning of this year, bullish analysts have been talking about that being extended into far beyond 2026. But nevertheless, Bernstein came out with a note this morning basically saying that what you're seeing right now is a short-term correction. And they're saying this because you have institutions that are more into ETFs now that have grown their ETF holdings over the last year. So these are sort of sticky holders, as they call them. And they also talk about strategy being a buyer at all levels, at all prices. And then you've got the Trump administration that has been very much wanting a Bitcoin to prosper in the US. The Clarity Act as well, that would be a catalyst. But whether or not we've seen the bottom, that is really the question. I mean, even Bernstein is saying that you could see a better entry point around the 80s. So they're saying that it could go down even more. Some other strategists have been talking about perhaps even a further correction. But we are more than 20% off the all-time highs. And the catalyst, as you were just mentioning, what could that be? The Fed. I mean, everyone is pointing to the Fed and whether or not you're going to see an interest rate cut in December and more dovishness into next year. That would be a catalyst for Bitcoin.
I just want to mention also some news we got this morning on strategy, which you mentioned. On Monday, we tend to get the news about whether they bought more Bitcoin. Guess what? They bought more Bitcoin. And this is something Michael Saylor talked about last week. There had been a report that Strategy had actually sold some of his Bitcoin, and he came out and said, no, that's not the case. And indeed, in the latest announcement, they bought $835.6 million worth of Bitcoin in the last week, ended Sunday. It's the biggest buy that they have made since July. And that means the total holdings for Strategy on Bitcoin on its balance sheet, about $61.7 billion. That was all in an SEC filing today. They're not funding it, though, at least at this point, by selling more of their shares. They're doing preferred securities offerings. They just did one in Europe. So that looks like that's what financed this latest buy. So interesting there, Ines, to see Michael Saylor, who, as we know, has been an indefatigable I'm not saying that word right. He's been a big bull in Bitcoin, and he's continuing to be.
Yeah. And the question is, I mean, it's definitely bullish anytime that you see Michael Saylor coming out, a Strategy coming out and saying that they're buying. And this has been sort of what they do along the way at all levels. But the question is, are there more marginal buyers out there besides them? And that's really the question for some strategists have been pointing to sort of waning marginal buyers. And again, these long-term holders that have been selling since the summertime, is this part of that cycle or not? One other point that you just to point about strategy is also, if strategy gets included into the S&P 500, it's an if, but that would happen if it did. We would find out in December next month. So that would also be a catalyst that strategists have been pointing to, whether or not they get included.
Right. Yes, definitely would. Okay, so we talked about the big catalyst that might be coming this week. We know it's coming. We don't know what kind of catalyst it's going to be, and that's Nvidia, Dan. So, we've been talking about what to look for there. What are you hearing?
Yeah, Julie, it's kind of Gene Munster over at Deepwater Asset Management said that this could be just a catch-22 for Nvidia, where if they beat and raise, then the conversation of the overspending or I guess overinvesting in the AI space continues on its path. If they don't beat and raise, well, then it shows that the AI trend is starting to sputter out or hitting, a speed bump. And so it really could be a catch-22 situation, as he says. For the quarter, we're expecting earnings per share of $1.25. That would be up from 81 cents. We're expecting revenue of $55 billion. That would be up from $35 billion. So 55% and 57% increases year over year in both of those categories. But, this morning, obviously, you pointed out Peter Thiel's fund had sold off all of their holdings in Nvidia. We had seen SoftBank sell off all of their holdings in Nvidia, though that's partially to fund their huge AI effort. Michael Burry, who obviously called the housing crisis essentially in 2008. He said that some AI companies, the Metas, the Oracles, are basically propping up their own earnings by extending the depreciation of their technology, the GPUs that they buy. And so, there's these conversations going on in the background or in the foreground, I guess now, about whether this trade is kind of oversold at this point. But at the same time, the numbers themselves are good for the likes of Nvidia, Meta, Microsoft, Google, Amazon. They're putting up good revenue numbers, and so it really is kind of a will they, won't they kind of situation here with all of these companies. And as long as they continue to have these strong balance sheets, then people will continue to think that everything's going all right, and seemingly it would be.
Yeah, we'll see how the numbers end up looking. By the way, Nvidia shares are still up about 40% this year, although in 2024 they were up 170%, and in 23 they were up 239%. So just a reminder for folks who are watching that stock. All right, Ali, Ines, Dan, thank you so much. Appreciate it. Coming up on Morning Brief, we're going to bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Now time for some of today's trending tickers. We are watching Novo Nordisk, Alphabet, and Aramark. First up, Novo Nordisk. The company said it's lowering the direct-to-consumer prices of its weight loss drug Wegovy and diabetes counterpart Ozempic. Existing cash-paying patients will now pay $349 a month as opposed to $499. The price reductions adding to efforts by the company and the Trump administration to make the treatments more affordable. So that would be an effect for Novo, but also could be a potential effect for Eli Lilly, which is its main competitor. Those shares down about 1% this morning. Next up, Alphabet. 13F filings showed that Warren Buffett's Berkshire Hathaway has taken a $4.3 billion position in the company. It is now the conglomerate's 10th largest equity holding as of the end of the third quarter. It's a surprising move given Buffett's traditional value investing philosophy and reluctance towards buying high-growth tech names. And finally, Aramark, the food and facilities management company, reporting revenue and adjusted EPS for the fourth quarter that missed consensus estimates. Still, the company's 2026 revenue forecast is in a range above Wall Street's forecast. The company also expressed optimism in its press release about the numbers. The shares, though, down 8%. Bubble as a buzzword in the AI trade became even buzzier after last week's tech sell-off, but my next guest says the specter of a steeper decline may be overdone, and the bubble talk itself may be facing a bubble. Joining us now, Nancy Tengler, Laffer Tengler Investments CIO and CEO. Nancy, it's great to see you. You know, it's really funny, all of this bubble talk, because as I was saying earlier in the show, the vast majority of folks we are talking to are saying it's not a bubble. They say things are, some things may be richly valued, but they don't consider it to be a bubble. Nonetheless, something was causing the sell-off last week. So what do you think is going on here sentiment-wise?
Well, it's great to be with you, Julie. I think a couple of things. I mean, I may be a little bit cynical, but I think a lot of the narrative has been driven by people who got out during the tariff tantrum and forgot to get back in. And then, of course, valuations have run dramatically since then. But I was managing money in the 1990s, and it didn't look at all like this. You've got CapEx spending that's just getting started. It was escalating or skyrocketing during the entire decade of the 1990s. You got earnings growth, and the growth stocks are expanding at 20% in the 90s, and from 96 to 2000, it was contracting. The best performing stocks in that decade were companies with no earnings. And that is just not the case now. And so will there be an overbuild? Maybe, but it doesn't look like it yet. And it doesn't look like it for the foreseeable future.
Nancy, something that has really struck me about this innovation wave, this huge rally that we've seen in the markets, is how ambivalent normal people seem to feel about it. And when I say that, what I mean is, if you look at survey data about AI, people are not super excited about what they think is a potential for them to lose their jobs. And that has happened to some extent in past innovation waves. But this one feels, the sort of disconnect feels a little more dramatic. I don't know. How do you think about that?
Well, you could be right, Julie. And I think it's been exacerbated by the fact that we don't have any data. So consumer sentiment numbers are pretty moribund, but I will say that we think the One Big Beautiful Bill Act is going to contribute to consumer spending due to, the bill was retroactive, as you know, and the payroll taxes were not adjusted. So there will be big refunds. Some are arguing 150 to 200 billion. And that money will get spent because it's going to the lower income cohort who usually does spend. So we've actually been adding to consumer discretionary in here, and we expect that the sentiment will shift upward, and that may bridge the gap to the disconnect you're talking about, because unemployment is still at super low levels. We are seeing layoffs, but we're not seeing the kind of layoffs we've seen in periods of recession, pre-recession, or a really weak jobs environment. So I think stay tuned. I think a lot of this has been exacerbated by the vacuum of information.
Well, and to that point, of course, we're going to get a jobs report, but it's going to be for September later this week. So once we start to get more of the more current numbers, do you think things are just not going to look as bad as perhaps the sentiment would indicate?
I think so. I think they're going to look not great, but they're not going to look horrible. We have some clues from the ADP weekly numbers now, the Revelio numbers, the ISM, which is privately, constructed data, gives us some insight into manufacturing and services employment. And we're also seeing that, generally speaking, consumers are still spending. It's mostly the upper income cohort, but people are working. And so once we settle in, we expect to see some wage growth next year. That will help. The tax refunds will help the consumer pretty significantly. So I think, and the jobs numbers have been so dramatically revised, Julie, to the tune of 1.7 million over the last 2 years. That means productivity is actually better than has been reported. So we're pretty optimistic. I think that will turn. And once everyone gets an optimist in every home, I think you'll see a lot of enthusiasm around AI.
Well, that's still feels like we're a little bit far away from getting an optimist in every home. But, be that as it may, you are still definitely buying and holding at least the AI trade here. And I think it's notable that I know you still have Nvidia. We've talked a lot about that. I know you still have Broadcom. And I find it notable that it is the big established names. It doesn't seem like you're going that far out the sort of speculative spectrum when it comes to AI.
Well, we're not in our major large cap strategies. We did launch a strategy that is a thematic strategy at the end of the last quarter, and it focuses on quantum space, robotics, and nuclear. So we do have some of the speculative names in there, but effectively, we think that you want to own the leaders in this environment, the fortress balance sheets, the companies that can issue debt attractively. You saw the Amazon news today. That's in our 12 best ideas portfolio, 5 for 25. But we also have broadened out, and that has been our theme for the last 3 years. Old economy companies that are embracing the new technologies. Think Walmart, think Raytheon, for example, as poster children for that side of the theme, and then the suppliers of the picks and shovels.
And you mentioned the Amazon debt sale, which Bloomberg is reporting this morning. When it comes to not necessarily the Amazons and Nvidias of the world, if they're taking on debt, but do you have any concerns about companies that have more debt on their balance sheet that are more speculative? Oracle, for example, which is now junk status according to the ratings agencies. Do you have any concerns on those fronts?
We do. I mean, I think at the center of our concerns are the commitments for CapEx that OpenAI has made. And the worry is that they won't be able to supply the revenues or raise enough capital to cover it. We had a call with Oracle last week. They are committed to keeping their investment grade rating. And so I think you will start to hear more from the company. I'm not convinced that sell-off was justified. The stock has certainly got ahead of itself. It's a member of our TGLR portfolio, which is our ETF, and it was the largest holding. We trimmed it back in the low 300s, but we still own a good chunk of it. And I think they became the dumping ground for the concerns post-Meta earnings and then this overcommitment, in my view, by OpenAI. So we will see. We may be adding to that name here in a little bit because it has been. It's just become a narrative stock, and the fundamentals are still pretty darn good.
Nancy, great to see you as always. Thank you so much.
Thanks, Julie. Thanks for having me.
Coming up on Yahoo Finance is Opening Bid. Executive Auditor Brian Sazi is with us now. Saz, what do you got coming up?
Got a lot of stuff coming up, Julie.
Okay.
We're going to talk about some Nvidia because, look, they're going to report earnings this week and the whole market cares about it. I'm very much also locked in on all things crypto and that mini meltdown. But for the big interview this morning on Opening Bid, Julie, we have Blue Origin CEO. He's flying right onto the set. Well, not actually, just remotely, Julie. He's flying right on. After that big rocket launch, New Glenn just crushing it over there.
Yeah, anytime you get an excuse to show some rocket footage, it's a good day.
We're going to blast off, Julie.
Okay, thanks, Saz. That does it for Morning Brief. Much more coming up. Opening Bid is next.